Hello everyone and welcome to Atomic ACCA's pre-mock exam solving series. And in this video, we are going to continue with section B solving for AA March 2025 exam. In the previous video, we have looked at what is the box question and the substantive procedures we had to do in case study number 1. Now we move to case study number 2 and we saw that we had a 5-mark worth of knowledge based question over here which we are already done with. So we can move to next question in this particular case study. So this is about internal controls. Question is asking identify and explain 5 deficiencies, recommend a control for these and a test of control. So this will be a 3-box question that we have to do. Now there's no box provided to us so we can create it, and it's 5 issues. So table 1 2 3, that is for the title. Then we need 1 2 3 4 5 issues. So this is how our answer is going to look like. So we'll just make it a little big. Titles can be made small. First one will be about deficiency. Next one is about recommendation. Next one is about test of control. So 1 2 3 4 5 issues we need to find, and that is it. So that's totally 15 marks. So let's start reading the case study. It is 1st July 20x5. You're the audit supervisor at Sound and Company, are in the process of reviewing narratives on transaction cycles at Beats Company. So Beats is the client, Sound and Company is the audit firm. Along with developing audit programs for the upcoming final audit for the year ended 30th September X5, 1st July X5. Okay. Beats manufactures and sells a wide range of portable music players. Beats sells to individual customers through website and also sell to retailers through a network of sales staff. Okay, so this is like direct sales to customers, and this is like kind of bulk orders that you're giving to retailers, to shops and all, and that is done through network of sales staff in your company. Now we have two titles given: purchase and goods received, sales and dispatch system. They didn't specifically mention to find out deficiencies from any of those headings, so what you have to do is you have to find it from both. Okay, so altogether 5 should be there. Even if you have 5 issues within this paragraph alone, don't find all the 5 from one heading, rather you have to split it across both. Now there's no exact amount of stating that it should be 3 and 2 or 2 and 3 and all, but try to find it from both areas. This is what we have to do. So first, purchase and goods received. The production department at Beats Company work on just-in-time basis. Orders for necessary materials are dispatched by the computer system according to preset reorder levels. Okay. The approved suppliers were all set up in the system 2 years ago as part of improvements in the integrated software. It is good that there is a computerized system for making the orders and all, but keep in mind all these suppliers that have been approved was entered 2 years ago. So there are chances that these suppliers might have increased their pricing. There are chances that they're no more giving extended credit terms. There are better suppliers in the market who is giving at more better quality at a little cheaper price. So these are not integrated into the software. So what happens? This is an indicator for a control, that is in any question when some data has been updated long time ago, that is an indicator that okay, something is going wrong. For example, bonus payments for directors have been set many years ago. The payroll payments for certain level of employees was updated many years ago. The tax deductions and the automatic deductions for employees for their salary and all was updated in the payroll system many years ago. So if any things are there that has been updated or integrated into the company many years ago, that means no updations have happened in the recent years. Specific to that situation, you have to always talk about what issue will that bring into the company if it's not updated. So that is our first problem. Let's frame the answer. Where is it? Okay. First deficiency is approved supplies were all set up in the system 2 years ago as part of this one. Okay, we'll just copy paste it. No need to do a lot of rephrasing. As supplier data has not been updated since 2 years, there are chances that better quality materials provided at cheaper prices by other suppliers, that is better quotations, could be missed out for Beats company. Hence, this may lead to additional cost on Beats company. Better quotations could be missed out on Beats. Okay, that is enough. So, what can be a recommendation? Purchase department must frequently update themselves about the new suppliers in the market, get often quotations about the product pricing, credit terms, etc., and choose the best one without compromising quality. These data must be updated and integrated within the software because it was computerized, right? So integrated within the software, and the approval of a particular supplier must be authorized by purchasing director. Always say manager, director, and whoever is in the senior most position in that department, just tell that name. Now, what did we tell over here? Suppliers data should be frequently updated by how? Getting quotations and things and all. If in case you're just telling that here the problem was it's not been updated since 2 years, and in the recommendation you're telling it should not be done 2 years, rather it should be done annually. If you just write a flip point, you'll not get marks. You always have to push your information little more and give more recommendation. So this is how you have to frame your recommendation part. Test of control means whatever I recommended over here, if in case hypothetically it's already applied in that company, then as an auditor, how am I going to test this? So what all did I tell? Purchase department, first thing I told is they need to update themselves about the new supplies in the market, get quotations and this thing, and choose the best one without compromising quality. This is the first thing I told. So I need to test this. How? Discuss with purchasing team about the procedures for purchasing. Then obtain a sample of purchase orders that client made, or obtain a sample of purchase orders and confirm that their confirm that purchasing department has obtained quotations from multiple suppliers and have chosen the best one out of it. So what are we checking over here? Whether for the purchase orders they are simply going with the integrated software suppliers, or are they actually getting quotations from different people. So you're checking for sample of invoice purchase orders whether quotations from different suppliers are available or not. So that first part is clear, and whether they're choosing the best one. Second thing we told is these data must be updated and integrated within the software, and approval must be authorized by purchasing director. So let's test that. Obtain supplier change data. Supplier change data means I just made up that word. Supplier change data means how many times the supplier data have been changed within that system. So change data from the integrated software and confirm that supplier information have been updated frequently, and confirm that these approvals have a confirmation from director either by approvals have a confirmation from director either by means of director by means of signature. Okay. So we tested whatever we recommended as well, and with that we are done with 3 marks for our first case. So one down, we need 4 more issues to find out. Let's continue reading. Deliveries are made within 12 hours by the supplier who invoice electronically when goods are dispatched. Supplier sent electronically invoice, okay, when they are dispatched. Items are put into production within hours of arriving at the BH's central warehouse. Okay, let's see. The team at the warehouse checked the goods received physically to ensure that goods being put into production are of appropriate quality or else production will be held up. Okay. The goods receipt note is then produced mentioning the time of delivery and the quantity of goods delivered. Okay. And a copy of these goods received notice sent to accounts and one copy is maintained at the warehouse. Okay. This is a common issue that we see with documentational problem, that goods received note and goods dispatch note, these are not sent to appropriate departments. Here they are making the goods received note and it is being sent to, one copy is maintained at the warehouse, one copy is sent to the accounts department. So accounts department will know that okay, some production items have come through, so we have to make a payment for this. If it's maintained at the warehouse, they'll have an idea about what inventory is coming in and going out. But there is this purchase department in the first place who ordered these goods. And if these people are not aware whether the goods have come in or not, how will the suppliers, the purchase department know which orders have been fulfilled already or which orders have not been fulfilled? So there is a problem with that. Two problems are, one thing, for orders that have been already fulfilled, you will go and make the supplier again where are the goods. So supplier will get irritated with that. Second thing, for goods that have not yet been delivered, purchasing department will not be aware of this, so they will forget to follow up with this. So that will automatically cause a delay in delivery to the customer as well, because they are following a just in time basis. Just in time basis means you're having inventory only when a order comes from the customer. So if products are not yet reaching over here, automatically that delay will affect on the customer as well. So this is the problem with having that documentational issue. There could be some issue within this as well, but for time being we're not creating anything. Maybe once we read it again we'll find it out. But for time being we'll find the second issue from this goods received note not being sent to the purchasing department. We'll create a problem over there. Then try finding the remaining three from these paragraphs over here with sales and dispatch system. So let's start. Second issue, is it copy of these GRN is sent to accounts department and one is maintained at the warehouse. A copy of these GRN is sent to accounts and one copy is maintained at the warehouse. Now, if the purchase department is not given a copy of GRN, two issues may arise. One, purchase department may follow up with suppliers who have already fulfilled the orders, and this may irritate the suppliers. 2, for unfulfilled orders, purchase department may fail to follow up follow up to quickly deliver these, and these delays will lead to slower deliveries to customer, causing customer to lose customer to lose their lose their lose their goodwill with company. This can lead to loss of revenue in future as well, because if customers are happy, they're not going to purchase from you anymore. So we told what are the issues with GRN not being sent to the purchase department. So now what we can say is, upon creation of goods received note, post delivery of products, Beach Co must ensure that a copy of this is sent to purchase department as well. Now this is straight up flip point of what is written over here. There it is told that purchase department is not given, so I wrote over here purchase department should be given. So will that be enough? No, I need to push the point further. I have to write something more. What can I write? We told about the issues as well over here, that if in case they're uh, you know uh, following up with a supplier who already delivered, then they'll get upset. So in order to avoid this, what can be done? Purchase department must compare this GRN with purchase orders and mark those delivered as complete, which means you don't have to follow up with that supplier anymore. So first problem is sorted. Second problem was you are following up with deliveries. So for those deliveries or for those purchase orders not yet delivered, purchase department must follow up on timely basis. So second problem is also sorted. Now is test of control. That is, whatever I recommended over here, I want to test this whether this is working properly or not within the client company. So what can I do? First thing, upon GRN, I have to see whether this is being sent or not. So for a sample of goods delivered at the warehouse, confirm that GRN copies are of 3 and is available at purchase department, accounts department, and the warehouse itself. So I got a confirmation that it's there at 3 places. Next thing, I need to see whether they're marking for fulfilled orders, whether they're marking it okay, complete, and for those that are not complete, are they following up on it? So obtain purchase orders, no, obtain the list of purchase orders, and for a sample of GRN created, confirm that these have been marked as complete. So if GRN is created means goods have been reached, and that means it should be marked as complete over there. So I'm comparing that and confirming it. How about the other one? Obtain a sample of purchase orders not fulfilled and confirm that there is a follow-up happening with supplier by checking the date of mail follow-up, because mail follow-up, if it is done, there'll be date. Now purchase order, let's say it's on, what is the year end, let's say whatever date, 10th of January, and if the follow-up mail is happening like let's say on 10th of February, that means follow-up is not happening properly. Rather, if on 10th of January the sales are made, purchase orders made, deliveries are made within 12 hours by the supplier. So if the date of the mail follow up is somewhere within 1 day itself, it means that okay, follow up is happening properly. So that is what I'm checking through the mail. Obtain a sample of purchase order not fulfilled and confirm that there is a follow up happening with supplier within 12 hours or within 12 hours or with I'll just write within 12 to 24 hours by checking the date and time of mail follow up. So we told the second issue and that is over. Next, we'll move to sales and dispatch system. Let's see what problems are there. Beats website allows individuals to order goods directly and full payment is taken in advance. Okay. Now, if it was an audit risk question, I would have written this as a advance payment. There is a risk that everything could have been recorded as a revenue. So there's an issue with that. But most students practice a lot of audit risk question and come to internal controls and write the same thing over here, telling that there is a risk that all the revenue could have been recorded in advance as revenue. Hence, revenue could be overstated, profits could be overstated, and liabilities could be understated. Just keep in mind what question you're doing. This is not an audit risk question. We're doing internal controls. So that is not a content to write over here. Be careful of that. Currently, the website is not integrated into the inventory system. Not integrated. Another trick for your internal control questions, any negative words, if it is there, that is also an indicator that something is going wrong. Into the inventory system, therefore, inventory levels are not checked. Again, negative word. At the time when individual orders are placed. So when orders are not placed and they are not showing the order quantity and all, or if it's not connected to inventory system, what would happen? Just assume that you're ordering from Amazon and you're ordering a particular good that you want. So you're seeing that okay, this good I like, price is okay, everything is okay, and you place an order, you made the payment also because it's collected in advance, and let's say you paid to Amazon, everything is fine. But let's say in reality that goods were not in stock and you were not aware of that. You'll be waiting for 1 week, 2 week, 3 weeks and all, and the goods are not coming through. Automatically you will be dissatisfied with Amazon service. And what will happen? You will mail them and ask, where are the goods I placed an order 3 weeks back? Where are the items and all? They'll tell that sorry, we didn't have enough goods with us. We are getting it from the supplier. We will send it to you within another week. Now this, if repeatedly happens, or if it happens with 10 customers, automatically Amazon will lose that customers over time because they'll feel dissatisfied that the stock prices, stock count is not being shown whether it's available or not on the website. So just place yourself as a customer, see what could happen, and now think from Amazon's point of view, write the answer. This is the situation over here. So currently website is not integrated and not checked when individuals are placing an order. So what would happen? If order quantity is not shown on the website, or no, that will write as recommendation. If inventory levels are not integrated with website, there are chances that orders may be placed and money collected for items that are not available in stock. This will lead to potential delays in delivery, causing a dissatisfaction in customers, some of whom may even ask for a refund of money due to delivery. This can cause the company to lose these customers. So we told the issue over there. Now how this can be improved? First thing, just to paste up our answer, write the flip point. What is the flip point? Now inventory system is not connected to the website, so tell that inventory system should be connected to the website. That is only a flip point. That is only to paste up our answer. We need to write more in order to get the marks. So client must ensure that inventory levels are integrated with the website. So that's a flip point. What else can be done? It's not only that integrated and the website knows it, this must be shown to the customer as well. So what just imagine yourself ordering from Amazon. If an order is out of stock or if it's limited stock, what do you see over there? When you're placing an order, it will show that okay, limited stock, only 5 available, or it is out of stock, you can't place an order. So like that, just be practical and just tell that updation should be made on the website. So the website should be updated such that if inventory levels are low, this must be shown to the customer as limited stock or out of stock. Then specifically for out of stock products, website must prevent the customer from placing an order for it, so that you cannot place an order if items are not in stock. So that problem is sorted. Now we have to test this thing. First, I have to check whether inventory is integrated or not. Now specifically I don't have to see that because the remaining is like a carryover with that itself, because if I check this, automatically it's understood that inventory will be integrated. So basically I don't have to check this paragraph, I can check this paragraph and confirm on the side that inventory is integrated there. What I can check is I can place an order for an item that is not available in stock or that is limited stock and see that whether these titles are being shown or not. So auditor can randomly try placing an order for items that are less in stock or out of stock and confirm that website is showing limited stock or out of stock respectively. So I can know that okay, this particular interface is approved, this thing is updated, everything is going fine. I told one more thing, specifically for out of stock product, website must prevent this. So for out of stock products, auditor must try placing an order and confirm that website is preventing from proceeding ahead with this, because this will give an idea that okay, that prevention block is also there for out of stock product. So we're done with our third problem. So we're done with 1, 2, 3 and 9 marks are over. Let's go into the next one. Beats retail customers. It was told earlier that they sell to retailers through a network of sales staff. So sales staff is there, they catch these retail customers and they sell it. So Beats retail customers undergo a credit check prior to being accepted and credit limits are set accordingly by the sales director. So that is fine. Sales director is like the topmost person. So credit checks and credit limits and all are all approved by them. So all that is okay. These customers place their orders through one of the members of the sales team because they're doing it through a network of sales staff who decides on the sales discount level. Now, credit checks and credit limits are done by sales director. This is a good control. But sales discount is being given by the sales team. Now that is not good, because sales team is like on the junior level position, and if they are the ones who is deciding on what discount level is to be given to the customer, automatically things will not go smooth. Why? Let's just think practically. Most sales team that works in any company will be having a commission based payment. That is, if they achieve so many amounts of sales, then they'll get a commission for that. So in order to lure customers, in order to get more customers, automatically sales team will start giving discounts up to whatever limit they want, such that they will achieve their commission for hitting so much amount of customers. But from the company's point of view, if discounts are given way beyond the limit, then this will be a loss for the company, because they're not getting enough money for the services or products being provided. So this will lead to a loss of revenue for the company. This is what we are going to tell over here. So don't copy paste the entire paragraph, just tell what is needed. So retail customers place their orders through one of the members of the sales team who decides on the sale discount level. Okay. Most sales team would have an income based on commissions on achieving target target level of customers. Hence, if discount levels are up to their decision, sales team may issue huge discounts to attract customers, but this will lead to a loss of revenue for the company. Now, what can be a solution to this? How this can be sorted out? First, write the flip point. Sales team may no, the discount levels, just like credit limit and credit checks, should be approved by sales director. But is it always possible that you can go to the sales director and tell that, okay, can I give this much discount, can I give this much discount? No, that will not have the operations go smooth. So what can be done is, in most companies we can see this thing, that the company will tell the sales team that, see, the product is $100, maximum discount we can give is to $90. That means there's a 10% discount that we can give. This will be already told to the sales team that this is the maximum, but you need to try hitting on to the minimum level. First tell them that, okay, as part of our policy, on a personal basis, I'll give you 2% discount or 5% discount. Within that 10% range, they can play whatever they want with the sales team, but the maximum limit will be told to the sales team that this is the maximum, do not go beyond this. So this thing can also be implemented as a policy within the company, stating that max limit of discount can be told to the sales team and advise to them that the discount should be given at the max to this, but try to get in between this. So this is how we are going to do. So that is like an additional point, okay, because the first one we wrote is only like a flip point. This will not be enough for our answer. So Beats company can create a policy where the maximum discount level that company can bear is communicated to the sales team and advise them every sale should be within this range, and to try reducing the discount as much as possible. So maximum is told, you're advising them reduce it as much as possible, but maximum only up to this limit. So this is a new policy that we are suggesting them to implement. Now I have to test this. How? First thing I have to test is whether these discount levels are being approved by the sales director or not. So for a sample of discounts approved, for a sample of discounts approved to certain, for a sample of discounts approved, confirm that this is for a sample of discounts provided, confirm that these discounts have been, discount percentage have been approved by the sales director by means of signature evidence. So that they told that okay, this much discount is okay. Next thing, for a sample of invoices sent to retail customers, confirm that the discounts allowed are only within the maximum limit allowed by the company. So what we are checking in the sales invoice, you're checking that every discounts given is either within that range or maximum up to that range and nothing is beyond this. So it can be confirmed that okay, this policy is also being followed properly. So for a sample of invoices, sales invoices sent to retail customers, confirm that the discounts allowed are only within the maximum limit allowed by the company. Okay, so that is also sorted. So 4 down, we need one more to find out. Goods are dispatched through local couriers, however, they do not, negative word, do not record customer signatures as proof that the customer has received the goods. That means what would happen if they don't find a signature on that? There will be a chance that you're delivering it to the wrong person. That could be a problem. There are chances that you don't deliver it at all because you don't know which one or who, which all sales have been completed, which all customers have got the product, so you don't know that. There are also chances that if it's a crooked customer, they will call back to the company and tell that I didn't get the product despite they got it already. So company will think that okay, they didn't get it and they'll send it once again. So that will be extra cost for the company. So these are all the issues that could happen if you're not taking the signature from customer. Let's read the next line and see if it's connected. Over the past 12 months, there have been customer complaints about delay between sales orders and receipt of goods. So, as we told, the issues are, it's like a continuing issue from that. Beats has investigated these and found out in each case the sales order has been entered into the sales system correctly, but was not, okay, again a negative word, not forwarded to the dispatch department for fulfilling. That means you got an order from customer and you just stayed silent. You didn't tell the dispatch department that see, like, this one order is there, you have to send it to the customer. So what happened? Order is coming in, money is coming in advance as told earlier, but you're not delivering it on time. So that's a problem with the delivery system over here. So there are two issues over here. Anyone we can write because only one more point is needed. So we'll just start with that signature thing. Goods are dispatched and okay, copy paste. Goods are dispatched through local couriers, however, they do not always record customer signatures prove that customer has okay. There is a risk here that customers may not get the goods at all, or the courier team delivering the goods to wrong customers, or even customers asking for the products to be sent again despite them already receiving it. As they are aware, delivery team doesn't make a note of this. all of these will lead to losing losing customer goodwill and also additional cost to company. All right, so now we have to recommend how to improve this. First is always write the flip point. The courier team must ensure that all deliveries when completed must courier team must ensure that or Beats company must inform the courier team as part of policy that it is mandatory to obtain signature from customers upon completion of delivery. Now that's a flip point. Now I need to write little more. What more can I say? The policy, as it is a local courier service used for delivery, policy with payments can be made strict by informing that deliveries made with no signature obtained from customers or a delay in delivery beyond a certain time period. Policy with payments can be made strict by informing that deliveries made with no signature obtained from customers or a delay in delivery beyond a certain time period will not be paid for by Beats company. So sorted. So we are making sure that the courier team does their work properly by improving the policy with regards to payments and with the delivery. Now, first thing, I have to confirm that first thing whether they are obtaining a signature or not. For for a sample of deliveries completed, confirm that these delivery notes are signed by the customer before signed by the customer. For a sample of deliveries completed, confirm that these delivery notes are signed by the customer and accepted. Okay, so we're checking that whether signature is there or not. Second thing was with regards to whether payment block has happened, meaning we are making sure that the payment policy is made little more stricter. So what I can see is for a sample of deliveries completed or for from a sample of complaints that have from a sample of customer complaints related to delay in delivery, obtain details regarding this if it was due to the courier service being delayed, and confirm from transactions that Beats company have not paid the delivery team as per policy, because it was told as per the policy that I recommended that if in case there's a delay in delivery beyond a certain time. Now delay in delivery not because of me not doing the work, but because of the delivery team not reaching it on time. So if they didn't deliver it on time, I'm not going to pay them. So I'm confirming that for a sample of customer complaints, because when delivery is not reaching on time, they will complain automatically. So I'll take some complaints specifically related to delay in delivery. Then I'm obtaining details regarding that, if in to confirm that if it is related to the courier service delaying it, because if the company is delaying it, then I don't have to bother that. But if delivery team is delaying it, then I'm confirming that whether transactions, confirming from the transactions or confirming from bank transactions, that Beats company have not paid the delivery team as per policy. So we're done with 5. They asked for 5 issues. We found 2 from the first paragraph, 3 from here. While reading itself, we found more issues as well. As said in the previous question, whatever they ask, they will give more amount of that within the case study in order for you to find out. So key points over here that we told was, number 1, indicators for deficiencies. If in case long time period updations are there, then that is a deficiency. Number 2, negative wordings are deficiencies. We saw a lot of not, no and all, so that is also a deficiency. Third thing we told was about documentational issues. These things are very commonly seen even in our exam kit questions, so make sure that you keep a note of this and see if documentational issues are there, what could be the possible implications over here, where all these items are to be sent out, and what all could be the potential issues if in case these documentational issues come up within a particular system. Now within sales system, within purchase system, within inventory level, everything is different issues, so make sure that the common ones you're always aware of these. So with that, we're done with the internal control question. So we're done with 15 marks, and the previous 5 mark was knowledge based question, and with that we are done with 20 marks for this particular case study. Now we are moving on to the last question, which has few substantive procedures only. So hope you have followed all the way till here. Stay tuned and see you in the next video. Bye bye.